Can Shopify beat Amazon? Let's take a look. By investing quick tips. Shopify stock has been on a tear lately, climbing over 67% in the last year. If you had invested $1,000 in Shopify just 5 years ago, that would be worth a cool $37,000. That's incredible growth, but pales in comparison to Amazon. If you had invested $1,000 in Amazon back in 1997, that would be worth over $2 million today. So you might be wondering, can Shopify sustain this growth and unseat the e-commerce behemoth Amazon? Can an investment in Shopify turn you into a millionaire? Let's dive in. For those who aren't familiar, Shopify started as an online platform to sell goods and grow brands. Today, across 175 countries, 1.75 million merchants use the Shopify platform to sell and market their products. In return, the software company earns subscription fees ranging from $29 per month for entrepreneurs to $2,000 and up for large companies. It also offers shipping, digital payments, and fulfillment under the umbrella terms of Merchant Solutions. Amazon is an e-commerce juggernaut compared to Shopify. So how does Shopify plan to close the gap? Well, there are some really good reasons to believe Shopify could repeat Amazon's explosive growth in the coming years. Reason number 1, huge room for growth in the worldwide e-commerce industry. E-commerce is a massive industry and Shopify is only just getting started. The worldwide e-commerce industry is expected to reach over $4.89 trillion in 2021. And while Shopify has seen impressive growth in recent years, especially accelerated by the global pandemic, its revenue in 2020 was still a modest $2.93 billion versus Amazon's $386 billion. Put simply, you can see how Shopify can grow its business many times over, and its stock might do the same. Reason number 2, Shopify has the potential to be the Amazon for merchants and small businesses. While Amazon is undoubtedly an e-commerce juggernaut, it has increasingly run into criticism for its treatment of merchants on its platforms. Shopify has taken a different approach, putting merchants first. The Shopify model ensures that if merchants and small business entrepreneurs are successful, so is Shopify. As sales increase, Shopify makes more money through transaction revenue and increased utilization of their paid merchant services. And to be clear, the small business market is anything but small. Small businesses account for 44% of US economic activity, so this is a huge addressable market. And less than 64% of small businesses even have a website still. Even with its merchant focus, Shopify streamlines online commerce for both sellers and buyers alike. Sellers can put up sleek storefronts in minutes, and buyers can check out in seconds because of shared services like Shop Pay. Reason number 3, Shopify Fulfillment. Of all the great tools Shopify offers merchants and generates revenue on, Shopify Fulfillment might offer us the greatest clue as to where Shopify is headed and how it can truly begin to compete at Amazon scale. One of the challenges Shopify merchants face when competing with Amazon is fulfillment. Because of Amazon's massive network of increasingly automated warehouses, often located just a short distance from big cities and population centers, fulfillment is an automated and streamlined process, and buyers have grown accustomed to receiving their deliveries quickly. How can a small merchant even begin to compete with this? Shopify realizes this and is moving into inventory management and fulfillment, leveraging a lot of the same automation that Amazon is. This is the type of technology that an independent merchant might not otherwise have available to them, but Shopify is offering it as yet another service merchants can take advantage of to better compete with larger merchants like Amazon. Reason number 4, the Shop app. This is yet another interesting tool in Shopify's arsenal that gives us clues as to the future direction of Shopify's business. Other large online merchants like Amazon have the benefit of a single shopping destination, which is the most convenient buying experience for their customers. How can Shopify, with millions of different merchants, possibly compete on user experience? With the launch of the Shop app, one can begin to see a potential strategy emerge. Shopify can create an experience that is the best of both worlds. By leveraging its own data store and merchant APIs, Shopify can feature products, recommend other stores to people based on prior purchases and location, and begin to build out a single destination to purchase all types of products akin to Amazon and other big online merchants. Reason number 5. Shopify has now enabled at least 2 companies to IPO themselves. Shopify as a platform is not just enabling the long tail of small businesses. Small businesses using Shopify are turning into big ones. With the IPO of Figs, and more recently Allbirds, it's becoming apparent that Shopify isn't just for small businesses. Its platform allows businesses and brands to grow into publicly traded companies. And as small businesses grow into big ones, Shopify can grow with them, offering additional services that help these companies scale, offering the tech backbone for merchant services while allowing them to focus on doing what they do best. As you can see, Shopify is competing on Amazon's home turf, while taking a vastly different, merchant-focused approach. Will it pay off? We will have to wait and see. Now, we'd like to hear from you. Are you an investor in Shopify? Do you think Shopify can actually take on Amazon? What reasons do you see for Shopify's potential success? Comment below. Like and subscribe for more deep dives on growth companies. See you next time.